Have you ever wondered about the implications of anonymous crypto transactions? Today, we'll dive into this intriguing topic. At the heart of this discussion is the concept of anonymous crypto transactions. In essence, these transactions allow individuals to transfer digital currency without revealing their identities, thereby providing a level of privacy that traditional financial systems often cannot offer. However, this anonymity can also pose significant challenges, particularly in the realm of regulatory oversight. One recent development that highlights these challenges is the new anti-money laundering legislation in the European Union. This legislation, which aims to combat money laundering and terrorist financing, includes specific restrictions on anonymous cryptocurrency transactions. While we won't delve into the nitty-gritty of this legislation just yet, it's important to note that it reflects a broader global trend towards increased regulation of cryptocurrency transactions. So why is this legislation significant? Let's delve deeper into this matter. The European Union has recently enacted a legislation to ban anonymous crypto transactions, but what does this mean? Well, in simple language, this legislation places restrictions on the use of cryptocurrencies in certain ways. Primarily, it bans transactions of cryptocurrencies through self-custody wallets, which are digital wallets that allow users to hold and manage their own crypto assets directly, without the need for a third party like a bank or a crypto exchange. Now, why would the EU do this, you ask? The goal is to combat money laundering and terrorist financing. The legislation also imposes limits on cash transactions and anonymous cryptocurrency payments. For instance, if you were to pay for something in cash, there's a maximum amount you're allowed to use, beyond which the transaction becomes illegal. Similarly, anonymous payments in cryptocurrencies are now also under the radar. It's important to note that this legislation was approved by a majority of the EU Parliament's lead committees, indicating a collective agreement on its necessity. The expectation is for these rules to be fully operational within 3 years. There are various perspectives on this legislation. Let's explore them. The crypto community has had mixed reactions to this legislation. Some view it as a necessary step, while others have raised concerns. The spectrum of perspectives on this issue is as diverse as the community itself. On one side, there are those who welcome the legislation, seeing it as a crucial stride towards regulatory clarity. They argue that these rules could help legitimize cryptocurrencies, potentially opening the door to broader acceptance and even institutional investment. However, not everyone shares this optimistic view. A significant portion of the community has expressed concern over the potential invasion of privacy. They argue that anonymity is a fundamental aspect of the crypto ethos, a cornerstone that should be preserved. The fear is that this legislation could set a precedent, leading to further restrictions that chip away at the very freedoms cryptocurrencies were designed to uphold. Beyond privacy, there are also economic implications to consider. Some warn that the legislation could stifle innovation within the crypto space, potentially pushing businesses and investors towards more lenient jurisdictions. So what does the future hold? Let's wrap up and summarize. Given the varying opinions and potential implications, the future of anonymous crypto transactions remains uncertain. In this video, we've unpacked the recent anti-money laundering legislation enacted by the European Union, which aims to curb anonymous cryptocurrency transactions via self-custody wallets. This legislation, endorsed by the majority of the EU Parliament's lead committees, sets specific restrictions on cash payments over certain amounts and is expected to be fully operational within 3 years. It's a response to the urgent need to combat money laundering and terrorist financing. We've also explored the diverse reactions within the crypto community. Some are in favor of these measures for the sake of regulatory clarity, applauding the EU's efforts to step up security. Others, however, express concerns about privacy and potential economic implications, reflecting the larger debate on the balance between regulation and freedom in the crypto space. As the crypto world continues to evolve, staying informed is key. Keep following us for more insights into the fascinating world of cryptocurrency.